What's up? How y'all doing? TK Profit from Profit Takers. We're about to jump into another live session. So let me get started. Where I lights Oh, let me turn this AI tracking thing off. Stop zooming in on me like that. All right. All right. Cool. So we were taking a look at Pound JPY last night. Where is it? Cool. Right here at this high right here, I noticed that we had a double top that wasn't retested. So right here at this area, I called a buy on Pound JPY. That area was hit. As soon as that area got retested, we got a massive move to the downside. And right now we're trying to see if this level of support is going to hold. So right here we had all of this movement, and once we retested it again, price consolidated again, showing us that this is a key level in the market. So if it does hold, the area that we've been waiting for to take our sell will be hit, and there's a high probability that we'll see the rejection from this area on Tuesday. So that's what we're looking for. Now the reason we're looking at that level is pretty much this area right here. You have a lot of rejections underneath that area, and price also struggled to break above it. So that lets us know that it is a major structural level within the market on Pound JPY. That's what we're taking a look at right now. Now with that area that was broke, I just highlighted it, and I zoomed in to see if any of these wicks tested this area, and none of them did. And this area just so happened to align perfectly with the 236 level on the field. So we got multiple things pointing at the possibility of a retest of this area and a rejection. So we took our buy down here. This is our original trade. So we hit TP1 and 2 on that buy, and I'm going to take a sell from here down to retest this structural level on the 4 hour. Uh-oh, I think I'm going lower. There's a double bottom on the 1 hour that wasn't tested. Let me make sure. I think that was Pound JPY. Let me see. Yeah. Let me get rid of these EMAs. All right, cool. So yeah, right here on the 1 hour time frame. At the lows, we got this double bottom that was printed, but price never pulled back to retest it. So this is honestly what I've been waiting for before our other targets are hit. I didn't expect this level to get broken at all without price retesting that level. So that was real funny to see that heavy pullback, but we'll see how everything turns out. So far, so good. We got some big wins. Let me see. Cool. Now with gold, last night we took a buy, pulled back to this structure level right here. We took one of our targets right here at this level, and the rest of them got hit at break even. So right now the area to watch is pretty much this structural level. I'm not taking a trade really until 11 o'clock. This is the key level right now. We could see a bounce from here. What were we looking for at those highs? got a double top. So we got a double top at the highs. Then we have a lot of rejections right here. Let's see if it was retested. No, nope. So it wasn't retested, so that's what we were actually looking for right here. I thought this buy would move a little higher, but that didn't happen. Now we don't have any major news dropping today, so the chances of this low being broken aren't really high. That doesn't mean that it can't happen. So what we do when we understand stuff like this is we just use our alerts. With this candle that was printed here, this flag, and same thing that we talked about earlier, that liquidity. With that flag pattern and all of this liquidity underneath this area, this flag right here, there's a chance that we could see a slight pullback from this area, only to retest this before dropping. When it's going to happen, it doesn't matter. That's what we use the alerts for, to let us know so we can be in the proper position. Let's not dictate the time. We'll just define what we see structurally. All right. So if it pulls back to retest this level, is that okay? If it pulls back to retest that level, I'm gonna take this sell. All right, cool. So that'll give us almost 1 to 5 on that setup on gold. Right now, we'll leave all of this alone right here. We'll wait for price to clearly define a direction, and then we'll just move according to that. Now, we don't want to trade in the middle of price, because right here the risk reward is terrible, no matter we're going to that direction or down to that sell zone. I'll show you. Make sure when you find your trade setups that you use your risk reward ratio tool. That'll keep you from making bad decisions. At a minimum, look for a trade setup that gives you a reward of 1 to 3. That way you don't have to be as accurate to profit. So taking a look at this right here, this is trash.
Sean Combs is a monster.
That's YouTube. They came in just dragging P. Diddy on the commercials in between tracks down. Okay. So yeah, that's a bad trade in either direction. Now, the reason being is we gotta be safe when you're doing trades like this, and wait till you get a break and retest. I'll show exactly what I mean after I finish setting up these risk reward ratio tools. So when you're trading in the middle of price, we're in the middle of 2 structural levels, right? You need to wait for the break above in a retest for this to be confirmed. Same thing here. But on this particular chart, there is no room really for price to travel. So those are bad trade setups. So what you should do is just wait until you're either here or down at the lows to take that trade, because those trades give you much better reward. All right, so that's what we got on gold. I'm gonna actually go ahead and set this up. What alert was that? Gold. Okay. So on this 15-minute, if this candle closes like this, that'll be a double bottom, which will support that theory of price moving up. I'm gonna watch it right here, because this thing, there's also a possibility we can and continue moving higher. So instead of setting my limit order right there, I'm gonna monitor price. We do got a head and shoulders pattern right there. Let's see. Looked at US 30 as well. Oh, I'm glad we didn't place that limit order. So at US 30, we were taking a look at these levels of structure right here. Neither one of them were, well, the top one didn't hold, the bottom one didn't get close to being hit. So we're gonna wait on this thing as well. We got a weekly level up here that we were looking at that needs to be retested. At this point, we're battling time. And that's the big reason why I like waiting until we get to our levels before jumping into these trade setups. Especially when you got a lot of rejections like this at one of your support levels. Because that lets you know you got stop losses underneath the bottom. Liquidity. And stop hunting is real. That's what this move was. It dropped to capture the money here and capture the money here. There's a gap right here. All it did was fill this gap and took off. What was this? I should have traded London. Now this is the next area that we're gonna see a problem. Let's see if it's gonna give you a clean break above to move to that weekly level, or if you'll see a rejection pulling back towards this structural level. Either way, with the way this thing's set up, I'm only looking for my trade right here and right here. When you're in the middle like that, it can get unpredictable. So, hold on a second. We're looking at US 30. Yeah, it can get, no, not a meme coin. It can get unpredictable, so we want to be aware of that and understand, like I said, the major structural levels, which right now is this level in this weekly zone. So we won't play around too much right here. All right. Oh, damn. Yeah, we should have traded London. I did not expect this. So we found this daily level down here. There's a double bottom down here on the daily. Shit. So we found all of these trade setups in our live session Sunday. I didn't even take it. So pretty much this is that double bottom that I took a look at. And again, it wasn't retested. So I figured price would drop back toward this level. This wick dropped inside to retest that right shoulder perfectly before rejecting and moving to the other direction. So we did a good job as far as analytics, bad job on execution because we didn't place the damn trade. And I said, we're going to watch this during the London session. And I went to sleep. It's all good. It's all good. What was that, the 30-minute? Yeah. So on the 30-minute, that low really could be retested. So let's see what happens at this key level. Again, we identify these key levels by looking to the left. Right here, price broke beneath a major structural level. When price was above it, you got valid support, and when it was underneath it, it was rejecting at that same area, using it as resistance. So when you see levels in the market like that, those are some of the best levels to take your trade setups from because of that protection. So if we get a retest of this level on NASDAQ 100, I am going to sell it again. Pretty much the same thing that we were looking at with gold. Now, same thing with gold. At the highs, we got multiple rejections underneath a major level that hasn't been retested yet. So you got to keep all of these things in mind when you take your trade setups. What was that 30-minute low? All right, cool. So since we know that that is a factor, this area needs to be retested. When we take this trade, don't over leverage. Make sure that you stick to your rules and wait. If your stop loss is hit, you just take this buy once price retests this area, and then you'll catch it going in the opposite direction. So when you understand where you are structurally, you'll know how to respond even if your trade goes against you. And that's what you learn when you get a better understanding of structure. You get that flexibility. That flexibility is key, because just doing this every day, at some point you are going to find a setup that's not right. You know, we don't win them all, but as long as you learn your lessons and learn how to capitalize off of those lessons and turn them into another victory, you put yourself in a better position overall. All right, cool. So we got those alerts set. From here, there's nothing else we need to do. Everything else looked well. We took this USD JPY sale. Really been having fun with this thing. So this was our original entry. This is our last target right here. Almost a 1 to 10. When we got this pullback to retest this 4-hour level, I found it just by looking to the left. I told you guys, that's how you identify these structural levels. I looked to the left, price responded to this level repeatedly. So when it comes to patterns, they normally happen over again. After noticing that, we got to that level. Let me go back to the 1 hour. We got to that level here, and we took this buy. Our last target was this area. I thought it would be hit, but it went, it dropped closer to our TP3. Okay, so after this area is hit, I'm buying it to see this move being played out here. And what I'm doing is just starting from the higher time frame. When you go to those higher time frames and you understand the major move, you can almost precisely predict the intraday targets once you see the majors, what are major zones on the intraday times. And I'll show you how to do that. Show you how to do that. It's real simple. So I use these two yellow rectangle bars to trap price. This is how you do it. On the higher time frames, you're normally going to see structural levels that fall either beneath or right above consolidation on the smaller time frames. So as soon as you trap price and find those levels, the only thing that you have to do is wait until they're tested to take your trades. That's all I'm doing. That's all you'll ever see me do. Whether we're trading options, forex, futures, crypto, it's all the same thing. Don't let nobody trick you. There is no damn special strategy for forex. It's all a tool. Price action, that's your friend. That's where you'll see everything, I guarantee you. YouTube, y'all be tripping. They go into commercials in the middle of the song. All right, so let's see. Dang. Let's see if this thing will drop and create a lower low. All right, so we got a little pullback before TP3 is hit, but still overall we got 2 lessons, 7 TPs hit. Beautiful day. Win. So now we're just gonna let everything run, man. I appreciate y'all for hopping on with us. The only thing that we're waiting on is gold. So when you find these trade setups, you can't rush. Like, no matter how excited you are, no matter how much money you want to make, nothing is going to move if the charts don't. And with us looking at these higher time frames, there's one thing that we got to be aware of. It's going to take a little longer for them to play out. Yeah, you have better odds. We actually make more pips, more money, but you have to also have more patience. And that's why we created our Mindset series, because that's the thing that separates you. I don't care how good you are technically in the market. If you don't have the discipline to sit still, the discipline to make sure that your risk is proper, you are going to forfeit everything that you win. And I wish more people would talk about it. That's the real thing. When you get in this market, you lose a trade, now you're battling with anxiety. Technical analysis won't help you with that. It's what you do with your mindset. We did S&P 500. I mean, we did gold and, not gold, US 30 and NASDAQ, but we didn't do S&P 500. I'm about to hop off right after this. There's a weekly consolidation. Okay. So this area right here on the monthly, this is a huge bull flag. So on the smaller time frame, this is it right here. Now on the monthly, it wasn't retested, so at some point it'll have to pull back to hit this level. And the same thing that I was just showing you guys earlier when I spoke about liquidity, price creating lows and rejecting at that area, and you have a major level underneath it, price will come back to hit that level. And that's what it looks like. Well, not looks like, that's what's set up right here on S&P 500. We got a gap at the highs. That gap will be filled. That was a buy zone anyway. So this was also a flag. The same thing that I'm telling you guys about that we're looking for. The same exact pattern. This. Oh, look at that. Double bottom. Cool. The same exact pattern, which is a bull flag. Now on the daily, since we're on the daily, you only see 3 candles, but if we go down to a smaller time frame, there is a lot of candles right here in this area. I'll show you. Let's see, let's do the 1 hour. Cool. So this bull flag right here, price just pulled back to retest it, then rejected it. That is the exact same thing that we're looking for on this weekly. I'm sorry, on the monthly. We got these rejections right here. We're looking for price to drop beneath it, retest that flag right here on the monthly, and then move up a little. So right here on the daily, remember, you only see 1 candle on the daily, but on the smaller time frame, there are multiple rejections right there at that area. So look, you see that? Price rejected at that area, creating liquidity. This move was a liquidity grab. And that's why I said, when you understand market manipulation, you can trade any time frame, any chart. This thing is the same. The only thing that you have to identify is where's the money. And then you can get a better understanding of the direction. And the money will always be underneath these multiple rejections like this, where you see consolidation, or right above it. So right beneath consolidation or right above consolidation. And when you understand that, you get some crazy entries. Yeah, we definitely should have did London. It's okay. But this gap needs to be filled. I believe I saw, what did I see? Nothing really. Yeah, so this gap in this daily high right here needs to be filled. With this drop that just happened, this may really be the move for today, and the rest of today will be consolidation and corrections, but it's also slightly moving to the upside. The next move on this may not happen until London session. Hold on a second. S&P 500. Yeah, so the next move on this thing may not happen until the London session. We got a massive move for the day already, and it took out how many candles? Shit. That one candle took out really the size of 4 candles. So we'll definitely see a little playing around in here at some point. Perfect. So we want to wait until the high of this zone is tested. We'll look for a sell stop loss above the highs. Now, same concept. This thing captured liquidity, but it also created it. It created the liquidity by rejecting, pulling back towards this level, and giving these multiple rejections. So now that we drop beneath to capture this, it created more. So when we take this sell from the highs, we don't want to use this area as support anymore. We want to, hold on a second. We want to trade to see all of that broken. So this isn't a particular strategy that I'm using. Now I call it the kill zone when I teach it to my students, but the only thing that I'm doing is looking at major structural levels. I'm finding market manipulation, and I'm trading past that manipulation to find the next level. That's it. So we broke it down into a systematic way to help you understand it. But fundamentally, if you just watch the market, you can learn this yourself, because that's how I picked it up. After I noticed it, I just started going to every time frame, testing it out. Like, you have to back test this. So outside of looking for those flags, this is the biggest piece of it, and this is right out of my course. I'm gonna show it to you for free, but I'm also show you that I charge people for it, but I just want to see people win, so I don't mind sharing shit. So this is one of the most important lessons, but it's a really simple concept. I think it's in the second week. All right, cool. It's called the downtrend structural break. So I'm not gonna play this. I'm just showing you that it's actually in my course, and it's legitimate. All right. So when you got a downtrend, price is making lower highs and lower lows, right? Before every downtrend ends, you'll see consolidation being formed. In most cases, you'll have a move that'll break those lows to capture liquidity, like we just said, and then the next thing you'll see is a break above the area where price consolidated. This area, this is what we call a downtrend structural break. The only thing that you need to do is wait for the retest of that area. You can really set a limit order. We do a lot of limit orders and make money, make profits without being present. But you set a limit order and you just take it to the major structural level. And that's how I get these crazy trade setups. When you guys see these 1 to 24 risk reward trades, I'm not doing anything special. I'm just being patient and paying attention to these structural breaks and identifying the major levels. And the magic trick is being disciplined, being patient, and really staying the fuck out your own way to let that trade setup play out. So that's the magic. And that lead me back to that mindset series. Now, the same thing that I just showed you, it operates the same exact way when price is moving in the opposite direction. So we got an uptrend. This is more so like price will move. We got an uptrend. It created all of this liquidity. Now it starts to print consolidation. Price creates that higher high, and then what happens, you get a break of this structural level, a pullback to retest it, and then it's time for the treasure hunt. Price starts to drop to capture all of the liquidity, and the only thing that you do is wait for the retest. Now, when I saw how simple this was and that it applied to everything, no matter whether it was options, crypto, forex, futures, the only thing that stops you, again, is your own disciplines. And I can show you this. Matter of fact, since I just went through these examples, I said I was going to get off like 20 minutes ago. Now that I went through these examples, I'm going to show you this on the chart. Or matter of fact, I'll show you in our last trades, and then I'll just go to, well, I just did it on S&P 500. So I'll go to the last couple of trades that we just profited on. So euro pound. Okay. Same thing, you guys. We got this move to the upside. I'm going to do this slow. You see this? Let me stretch this out. I'm going to explain this as I do it. I won't rush through this. So I want y'all to look at this. Right here at this area, it created these multiple rejections. But right here, it did the same thing. This is your higher low. Price dropped beneath this area right here to capture the liquidity, only to retest this level before pulling back. Right? Now, let me show you what that is. This is the same thing that we just talked about. Even though price is moving, the concept stays the same. That's consolidation. This is the break of that area. And this move is the retest. Boom. And what did price do? Broke above consolidation to retest the next structural level. So every chart that we go to, I can show you this exact same thing, no matter what time frame. Now, here's the thing. Well, the same thing in reverse. Damn, I skipped the ad and muted the song. What happened? Oh, that's not me. All right, cool. Let me just go to the next one. All right, cool. So the same thing at these highs. I told you guys, the price is going up, it's making higher highs, higher lows, even if it's not in a perfect channel, even if it's a little messy like this. If you just take your time and draw where you see your pivot highs and draw the areas where you see your pivot lows, price is still sticking to that fundamental concept, creating higher highs and higher lows. Okay. Once we got to this area, we see consolidation. Now check this out. This is the area where you got your uptrend structural break right here. So I waited until this thing was retested. I took a sale by placing a limit order. And this was a 1 to 28 trade. It dropped all the way down to, hold on, make sure that's right. Cool. So 1 to 13. And right now we're doing what? Consolidating in the middle of these two major levels. So I'm just setting an alert above and below and staying out my own way. Okay. So this is how I found this setup, which is the same thing I just showed you guys. USD JPY. That's what this is. I did the same exact thing. Okay. So price was moving up. We got this consolidation that happened at the highs. Price broke it right here. That's the uptrend structural break. Oh shit. Let me put that back. Boom. I waited on the retest. Entered the trade, and we got a massive move to the downside, and we're almost about to hit TP3. So trading is simple. Discipline is hard. And scalping, I'm gonna be honest, scalping is cool when you know where you are. Like, let me say, like these moves, for instance. Like, this is range. Well, if you completely understand that and you know that certain things need to develop before you see a structural break, or the news needs to be in alignment, certain times need to be in alignment, then you're not looking for a home run. The problem with new traders is every trade setup is a home run to them. So that's why I don't recommend scalping, because you don't know when to exit because you're holding on too long. Now, finding these trades on the higher time frame that'll fit what you actually want to do, which is let the trade setup run. And that's what we do by understanding this and waiting on these things to develop on the 2 hour instead of the 15-minute. And that'll also take you away from those instances where you enter that trade setup. So let's say you took the sell, but you were scalping and you're so used to identifying those close levels on scalping, and then you see this happen. Most people are a little toasted by that. Like, oh shit, I wish I would have let that trade setup run. Or you get right here and now you're buying, and the money that you just made on that sale, you just gave it back to the market. That's not a fun feeling. That's all I say. I'm speaking from experience. So even gold, like this was our original entry on gold. That's a 1 to 24 trade setup, and we had this 1 to 11 as well. Right here at this high, we actually took a lesson. We took a L. I sold it from here, looking for this liquidity grab to happen, and it didn't quite work out the way I expected. It dropped down and hit our TP1, and I was really excited from winning these 2 trades, and I let that shit get in the way of my disciplines, and I did not move my other trades to break even. So I hit TP1 and I lost 2 positions on this trade on gold. It came up here to hit our 3rd TP, and I sold it. So everywhere I have my TP3, it's a area to take the trade in the opposite direction. So right now on that sell, we already hit TP1, and we're up another 1 to 7, man. Win. But again, it's all using these basic concepts. And let's say you didn't know that this structural level was here. What would I use? The same exact thing that we just talked about, the uptrend structural break. This is where price consolidated. This is the area that it broke. This move is the pullback. As soon as price pulled back to retest that area, there you go. There's your entry. Stop loss slightly above. And even if you would have taken it to this structural level right here, that's still a 1 to 6 risk reward ratio trade, which is better than most traders that I see online. And you didn't have to do nothing. So that's what I'm using. It's not a strategy. Damn, I just gave out a whole tutorial and shit. Yeah, it's not necessarily a strategy. It's just watching the fundamental movements of the market and understand how everything works together. Consolidations, uptrends, downtrends, and how it just creates a cycle. You got to watch the patterns to understand the cycle, understand what is manipulation is, what the areas that will be manipulated, understand where they are in the market, and from there, everything else is just being patient. So I appreciate y'all for hopping on with us as always. For those that want to begin with us, you don't know where to start, I created a system that shows you how to set up your live account, shows you how to set up your demo account. I teach you how to place your trades and monitor your trades. So when you see me online taking these setups, you'll be able to hop on with me. Man, don't you be messing us up like that. There you go. Give us a hard beat to end with. But yeah, that way you guys will be able to hop on with us and take these trade setups when you see me go live. The results speak for themselves. All you got to do is show up and see it with your own eyes. Okay? Along with that, we have the free trial to our Mindset Series, Structure Breaking. There's really nothing that you can do until you get your mind in alignment with your dream, okay? So that's where we bring this piece together. You got to understand the power of your thoughts, beliefs, and actions. And with our Mindset Series, we give you our 6-week journal to help you be more intentional with your words. When people get into trading and they lose trades, they say the worst shit possible to themselves, and it creates a cycle of dysfunction that's hard to escape. And that's what anxiety is. That lack of trust in yourself because of your past perceived mistake. So we got to get you over that. We also got a few books available on Amazon. 6 Steps to Trading with Consistent Results, and we have a few log books to help you log your trade setups and your emotional state throughout the process of executing. You have to understand your emotional state in those processes so you can identify those problems so you know where to add remedy. All right. Outside of that, we got that merch. So support that vision, support the dream, and to join us, you can start up with that beginner bundle or upgrade to tier 2. And always remember, you're one trade away from living. Why fight to stay the same?